Good morning, everybody. It's Tuesday, September 17th, 5:26 a.m. Central Time. Grain markets are mixed to higher this morning. December corn futures up a quarter cent at 4.11. November soybeans unchanged at 10.04 and a half. December Chicago wheat up 3.25 at 5.81 and 3/4. December Kansas City wheat up 4.25 at 5.84 and 3/4. December spring wheat up 5.25 at 6.25. Let's start off with the tariff story.
So, the Biden administration announced substantial tariff hikes on Chinese imports last week. Some of the hikes include a 100% tariff on electric vehicles, a 50% tariff on solar cells, a 25% tariff on steel, aluminum, EV batteries, and key minerals. The increases are meant to strengthen protections against China's state-controlled industrial practices. Industries affected by the tariffs have criticized the decision, claiming that it will disrupt supply chains and raise costs for U.S. consumers. They also say that the tariffs won't discourage problematic Chinese trade policies and practices. China responded to the tariffs, saying that they would backfire on the U.S. The tariffs are set to take effect on September 27th.
China said that they would backfire, but I don't know that they provided any details. Here's some of the news straight from the horse's mouth. This was out Friday. We didn't get to it yesterday because we were busy with other stuff. But today's finalized tariff increases will target the harmful policies and practices of the People's Republic of China that continue to impact American workers and businesses, said Ambassador Catherine Tai. These actions underscore the Biden-Harris administration's commitment to standing up for American workers and businesses in the face of unfair trade practices. So we've talked about this before. Biden is doing Trump stuff, basically, when it comes to tariffs, right or wrong, however you view it. They slapped a date on it now, September 27th, which is next Friday, I believe. Here's the list of items and increases. This is straight from the USTR website. Battery parts, electric vehicles, face masks, all sorts of batteries, medical equipment, whole bunch of stuff. So guess what? Canada did the same thing 2 weeks ago. And what did China respond with? A probe into canola imports or dumping, essentially. And what did the canola market do here in the U.S. and in Canada following that? It fell apart. And I wouldn't be shocked if China came back with something regarding U.S. ag imports. Soybeans are the obvious one. And as I understand it, the Chinese tariffs on U.S. soybeans are still in place. They're just waived in almost every instance. And that's why China's been buying U.S. soybeans. But they could very easily shift policies back and say, you know what? We're going to tariff the beans. We actually don't need them anyways. And that's just the way it's going to be. So be prepared potentially for some bad news late next week. I hope I'm wrong.
An economic slowdown in China has caused grain imports to plunge. Chinese consumers have cut back on meat consumption due to the cooling economy. The situation has lowered the amount of grain required to feed the nation's pig herd or to fry food. For the current season, which began on September 1st, the U.S. has only sold 13,400 metric tons of corn to China. China is expected to continue to rely heavily on soybean imports. Brazil, however, will likely continue to dominate that market thanks to its competitively priced soybeans. With the exception of the trade war during the 2018-2019 season, U.S. soybean exports to China this season are the lowest in the last 16 years.
Some of the copy in this article from Bloomberg, it was a well-written article, but the copy is terrifying. I'll read you a couple things. Warehouses across China are bulging with grain as a deepening economic crisis takes hold, leaving the world's farmers to grapple with the prospect of a long-lasting slowdown gripping one of their largest customers. None of this will change soon, and the combination of an aging population and a cooling economy augurs poorly for the future. So not necessarily a positive headline. USDA projects that China will still have the second largest soybean import program this year, although I think people have questions about that. USDA quietly dialed back its projection for corn imports in its most recent report. They went from 23 down to 21, and I wouldn't be surprised if that fell a little bit further. So, you know what? We're competitive when it comes to soybeans on the export market. I think corn, we're pretty close. China's just not buying what they would normally buy out of the United States, and I don't know that they ever do unless Brazil runs into a real crop problem, and it's a little too soon to jump to that conclusion.
So if you guys haven't checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Yesterday's video was super interesting. China-made ag drones. Are they a security concern? And this video was a response to this article and similar articles. U.S. lawmakers want to address risks associated by ag drones that are made in China. So my guest yesterday was Taylor Moreland, and he owns a company called Agri Spray Drones out of Missouri. They are the largest distributor of drones from a company called DJI in China, and that's the company that was named in this article from Reuters and a couple of others. First off, I wanted him to come on to kind of debunk some of this stuff because a lot of it is nonsense and it's political. But he also got into some really interesting stuff about how drones, first off, when it comes to fertilizer application, can be a big time ROI item for farmers. And in this day and age, with things as tight as they are, people are looking to cut costs and add value in any way that they can. He also got into tariffs. So he pays tariffs. He pays tariffs to the United States. And it's a real world example of a business in the United States being impacted by the tariffs and being impacted perhaps by the forthcoming tariffs. Super, super interesting conversation. Chris Barron's going to be on today talking about 2025 corn and soybean budgets. It's not fun stuff to talk about, but it's stuff that we need to talk about. Steve Johnson's going to be on Thursday talking about margin protection. Is that for you? If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription, canceled at any time. No other fee, no other obligation. Nobody will try to sell you anything else. You'll get our morning email every single business day at 5 a.m. Central Time. It includes all of my grain marketing recommendations broken down by crop year, and percentage. I just advise cash sales for the most part, very little in terms of options or anything along those lines. Check that deal out this morning, guys. It's the best way to support what we're doing here. YouTube pays us next to nothing. The podcast pays us $0 to be exact. So if you're a premium sub, we love you to death. And if you're not a premium sub, you should sign up. And if you're not going to sign up, thank a premium sub, because that's the only reason that we're here. So
hot and dry conditions are hindering soybean planting in Brazil. According to well-followed private group Ag Rural, as of last Thursday, only 0.06% of the total expected soybean acres had been planted. During the same week last year, 0.15% of the anticipated area was planted. Some portions of the Brazilian state of Parana are forecasted to receive scattered rain in the near term. However, the outlook is much worse in Mato Grosso, where no rain is forecasted this week. Ag Rural also reported that as of last Thursday, 19% of the expected acres for Brazil's first corn crop had been planted, down from 20% a year ago.
So in the U.S., farmers will plant when it's dry and actually prefer to do so in some situations. In Brazil, it gets so damn dry during the dry season, especially this year, that they really need the rain during planting. If they plant, they risk emergence failure in replanting. So they wait till it starts to rain. And that's why everything is behind. The extended forecasts continue to hint at this idea that you're going to see a wet pattern return like second week in October. And this Euro EPS is indicating that you're going to see a lot of rain during the, say, second half of October in particular. So is that real or not? I don't know. I don't know if the market's overly worked up about this, but if they throw some rain in the shorter term, you might see soybean futures in particular react negatively.
The National Oilseed Processors Association released August crush data on Monday. The U.S. soybean crush last month fell to a 10-month low when NOPA members processed 158 million bushels. The crush was the smallest since September 2021 and was the lowest level for August since 2017. The crush was down 13.6% from July and down 2.1% from August 2023. Furthermore, the crush was well below the average trade estimate of 171.3 million bushels. End of month soybean oil stocks in August fell to a 10-month low of 1.1 billion pounds. Stocks last month were the lowest for the month since August 2023. I do not have that number correct. Excuse me on that. But stocks were down 24% compared to the end of July and down 9% versus year-ago stocks. Additionally, stocks were below the average trade estimate of 1.4 billion pounds.
I probably say something wrong every day. So don't worry about it. It happens. We say a lot of stuff. You're going to make mistakes from now to time to time. In any case, I don't ever remember the trade missing the crush number by this much. I mean, they missed by 13 million bushels. I've never seen them miss by that much. Not ever in my career. In any case, the trade drastically underestimated the amount of maintenance and downtime that would be taken. This is a bad number, and it's for the old crop marketing year. So USDA, could they have to walk back the crush print or crush estimate for old crop by a small margin because of this? That's a possibility. In any case, I would fully expect that the crush returns to record or record-ish levels here during the next couple of months for sure.
U.S. corn conditions improved slightly last week. The crop was rated 65% good to excellent nationally as of Sunday, compared to 64% the prior week. The rating surpassed the trade expectation of 63% and was the best for the week since 2018. USDA estimates that 9% of the crop is harvested nationally versus 5% the prior week and 6% on average. U.S. soybean conditions were reported at 64% good to excellent nationally as of Sunday, compared to 65% the prior week. The rating was in line with the trade expectation of 64% and was the best for the week since 2018. USDA estimates that 6% of the crop is harvested nationally versus 3% on average.
So harvest is moving along ahead of schedule, and I don't think there's anything to write home about there. Good to excellent ratings. State of Ohio dropped 10% this week. It went from 49 to 39, and the drought in Ohio and also in parts of Indiana has become an issue, certainly. Indiana dropped 5 points to 63% good to excellent. Still, this is nationally a very good rating for this time of year, and I think the trade is still of the opinion that USDA is probably pretty close with its yield estimate. Could you see these numbers for Ohio in particular drop a little bit? Yeah, you probably could. What about wheat?
U.S. spring wheat harvest is ahead of schedule. The crop was 92% harvested nationally as of Sunday versus 85% the prior week and 90% on average. Analysts had projected harvest to be 93% complete. U.S. winter wheat planting was 14% complete through Sunday, compared to 6% the previous week and 13% on average. Analysts had projected planting to be 13% complete. States with 20% or more of the crop planted include Colorado, Montana, Nebraska, South Dakota, and Washington.
So we're starting to make some progress with winter wheat in the southern plains. Kansas is 9% done versus 4 last week. Oklahoma's 6% done. Colorado's up to 35. Nebraska up to 21. So moving along, no issues here, ahead of schedule.
U.S. corn shipments were disappointing last week. USDA reported that 21 million bushels of corn were inspected for export during the week ending September 12th. The print was down 38% from the previous week and down 23% compared to the same week last year. Soybean shipments were reported at 15 million bushels. The print was up 10% compared to the prior week, but down 6.7% versus the same week last year. Wheat shipments were at the upper end of expectations at 20 million bushels. The print was down 10% from the previous week, but up 32% versus the same week last year.
I'm not going to read too much into the shipments number right now, but a month from now, we need to pay close attention to the soybean shipments in particular, because we are in the prime time gut slot of soybean shipping season. The river continues to be a problem. We saw a little bit of an uptick in river levels, but they're still restrictive, and they're expected to decline sharply through month's end, which is a problem.
Speaking of soybeans, we did have a flash sale yesterday. U.S. exporters sold 5 million bushels of beans to unknown destinations for delivery during the 24-25 marketing year. Since the beginning of the month, exporters have sold a total of 30 million bushels of soybeans through flash sales.
Yeah, we've absolutely seen a little bit of an uptick in export sales for soybeans from China in particular, which is normal this time of year. The sales and to China especially and to all destinations are not where they need to be. However, what did cattle do yesterday?
They were mostly lower. Live cattle were down 45 cents to 17 cents lower. Feeders were 60 cents lower to 55 cents higher. Box beef was also lower yesterday. Choice ended the day at 304.57. That was down 34 cents. And select ended the day at 292.14. That was down 203.
Outside markets, U.S. dollars off a little bit. The stocks are up. The S&P's up 18. The Dow Jones up 110. Bonds are mixed. Crude oil is down 27 cents in the November WTI at 68.75. Have a great day, guys. We'll talk to you on Wednesday.